Hey, bro, you better get ready to buckle up because this shit don't get no easier, bro. Once you think the grind gets easier, come on, bro, you silly, man. This grind's only for the strong ones, bro. And if you weak, I suggest you go ahead and leave. It's tough, but it's true. Be safe.
Until you figure it out, find you a hustle, make your money, and like you gotta have something figured out. Like you gotta have a goal. And you just gotta work towards. You gotta manifest. So like it's a whole lot of power in your tongue, and you just gotta speak it into existence and work.
You gotta be cool, not ever being recognized. You gotta be comfortable with that and not feel away about it as long as we get into the check.
I think you just gotta know what you stand for and know what you represent, know what's true to you. Because you can't please everybody, you can't be everything to everybody, but you could be true and you could be yourself and comfortable in your skin and just represent what's real.
What's happening, everybody? It's your boy Creative. Go ahead, say it with me. We are back at it again to do what? To create something great. Now, today I'm super excited what I have planned for y'all today. We're going to be jumping right back in to our algo build. We're going to be building a gap fill strategy. Now, this gap fill strategy is going to be trading QQQ. QQQ is the top 100 tech companies within the NASDAQ, and we're going to be going over this strategy, how it works, what it does. I've pulled this strategy, or I started this strategy with TradingView indicators, but we had to adjust a few things such that it works for 0 DTE trading. Now, 0 DTE are option contracts that expire the same day, and we're going to be building this out from start to finish. So super excited for this. If you do have any questions, please feel free to ask. If you haven't already, I need you to go ahead and like and subscribe. So let's go ahead and jump into this thing. Right. Again, this is going to be our 0 DTE fair value gap inversion strategy. This strategy. Now, before we get into the weeds of it, right? So let's talk about what is an algo, or what is an algorithmic trading system. An algorithmic trading system is a set of rules and instructions that we provide a computer such that it's able to buy and sell options programmatically for us or automatically for us based on the rules and instructions, right? So what we have here are the rules and instructions for our gap fill strategy. So this strategy is only going to trade between 9:30 and 11:25 a.m. Let's think about that. Primarily at the time, right, when gaps happen, and let me just show you from yesterday's market. I'm looking at QQQ, and this is yesterday, right? Yesterday being Friday the 16th. This is what happened during the market. Now I'm looking at the 1 minute chart. This 1 minute chart means that each one of these candlesticks represents 1 minute of action between the buyers and the sellers. And I'm also looking at this with Bollinger Bands. What are Bollinger Bands? Bollinger Bands are another way for us to be able to figure out if an item is overbought or oversold. When we see this, the candlestick breaking the top line, this top red line, that lets us know that the asset is creeping into overbought territory, or FOMO, right? Individuals are feeling like they're missing in on the opportunity, so they want to be able to invest more and more into the underlying company, ETF, whatever it may be, right? When you see it touching this blue line is a 20-minute average. Now this 20-minute average, we can change it to 10, we can change it to 15, but standard for Bollinger Bands is about a 20-minute average, right? And then this green line is going to represent our oversold territory. This is going to be when the price is reaching when everybody's in panic mode, right? When everybody's thinking that, okay, they missed it, they want to be able to get out this asset, right? And when you see it reach this green line, that's oversold territory. So yesterday when QQQ first opened, and this is where I kind of wanted to like have this gap play strategy, because both QQQ, top 100 tech companies within the NASDAQ, and let's just go look some of their holdings real quick. I know, so I want us to be like super comfortable with being able to understand QQQ, because we're going to be using them a lot, right? So with inside QQQ, we have Nvidia, Apple, Microsoft, Amazon, Tesla. This is Google. Don't ask me why they decided to call themselves Alphabet Class A. This is Facebook. I will never call you Meta. This is YouTube. How ironic. Broadcom, Casco, Palantir, Netflix. Let's just go a little bit further down. So we have Nissan, we have Charter Communications, CoStar Group, Kraft Heinz, Vertex and Analytics, INS Med, Old Dominion Freight Line, that's a trucking company. We have Dr. Pepper, Paycheck. So as you can see, it's quite comprehensive as far as the holdings is concerned, right? So we're having the top 100 tech companies that's within this ETF. And when you think of an ETF, I want you to think of a quilt, right? And each one of the quilts represents a different company. So this particular ETF has 100 of the top tech companies within the NASDAQ, right? So yesterday, QQQ gapped up. So what is a gap up, right? Or a gap? A gap is when the open, right, opens higher, or it can gap down too. So I don't want you to say this is just a binary thing, right? It can only gap up, but it can gap down as well. So a gap is when the underlying price of the asset opens higher or lower, right, than where it closed. So QQQ yesterday closed at 620, excuse me, QQQ on Thursday, because this is Friday we're looking at. QQQ on Thursday closed at 621.05, then it opened at 625. So almost a $4 gap, right? So what we want to create is a strategy, and a gap is where, again, there's no trading happen between the 621 and the $4, right? So what the gap fill tries to do is create trading or create volume or activity around that gap, right? So it wants to be able to fill that gap and being able to get the price back to its average, or being able to make sure that there's more activity within that area. Does that make sense? Right? So what we're creating is a gap fill strategy that enables us to be able to trade in the morning from 9:30 to 11:25. The reason we want to trade starting when the market is open, because I want this strategy and eventually bot to be able to understand and see if there's a gap and what direction is it moving. And then we're going to cut off trading by 11:25. So almost 2 hours and 25 minutes of trading. We're going to have morning volume and liquidity, right? These are perfect for the fills that we want to see. Oh, I forgot to mention one thing. Let me make sure. Yeah, vibes are playing. One thing that I do love about using the Bollinger Bands, right, because it allows us to be able to get a visual of, even though if the price goes up, right, even though if the price is pushing through resistance. And what is resistance? Resistance is when the underlying price of the asset is making higher highs, right? So when it's pushing through resistance, it's making higher highs, and when it's pushing through support, it is making lower lows. So one great thing that I love about the Bollinger Bands, it allows us to be able to visually see, even though if a price goes through the resistance line, it eventually finds its way back to its average, right? It crashed through the overbought or the resistance line, right? And then it found its way back to its average. It crashed through the oversold line, and guess what it did? It found its way back to its average. It's still oversold, but it's finding its way back to its average. So that's why I like to use Bollinger Bands in addition to a few other things, right? And we can also see a squeeze here. I mean, squeeze, and it just went straight down. Another reason I like to use Bollinger Bands, right? It allows us to visually see that even though if an asset becomes extremely overpriced, eventually it's going to find its way back to its average. Now it's just a matter of how long that's going to take. Sometimes it's 20 to 30 minutes or the whole trading day. Sometimes it can be within a matter of seconds, right? It's just a matter of how the market is moving. So we're creating a gap fill strategy that is going to look for these type of plays right here. Let me just show you SPY. So you can see SPY definitely had a gap up yesterday too. And there was also gap downs during the week. All right. And you see these bands going crazy like that. That just means volatility, right? So we're looking at SPY. SPY is the S&P 500, the top 500 companies within the New York Stock Exchange. And then SPY closed on Thursday 692.11, and then it opened 693, right? So almost like a $2 under a $2 gap, but it's still significant, right? Because eventually, again, as you're seeing here, it gapped up. It's in an overbought territory, and guess what it did? It found its way back to its average, and then there was a little bit of a squeeze, and then it went all the way, it went super bearish, right? And bearish just means that we're thinking that the market is going to go down. So what we're going to be building here is our gap fill strategy. So let's go back. Max trade was going to be 1 trade per day. Maximum hold time is going to be 3 minutes, and our position sizing is going to be based off of how much money we have on our account. Now, all of our strategies, and you'll see it once we go over the back test, all of our strategies start with $100 because we want to be able to dispel the notion that you need thousands of dollars in order to invest option. And now when you do it algorithmically, it makes it a little bit more tangible for us, so, and a little bit more accessible. So that's why I want to be able to show y'all that you can start with 100 and it's able to do quite well. I don't know, let's see. So what is the fair value gap? The fair value gap is a price gap on the chart where there's no trading. The price jumped over the area, leaving it empty, right? So we have the close, and again, we just talked about it, but here's a little bit more of a visual. So here's a bullish FVG, right? So the price went up. Here's the gap, the empty space where there's no trading, and then here's candle 1 about 2 bars ago, right? So bullish gap up is the price gapped up, leaving a hole below, right? A bearish gap is the price gap down, leaving a hole above, right? So either of these plays, if it's a bullish, we're thinking that, all right, bet, may buy a put because we're thinking that the market has to be able to fill that space, right? Fill that space below. So we want to be able to catch that. And then a call for, we want to be able to catch the space above. So the key concept is the price loves to fill these gaps, and it often returns trades through the empty area. So there's 5 stages of our gap fill strategy. Not all gaps are created equal. Understanding the stages helps us to gauge the commitment. Stage 1 is the creation. This is when the gap just formed, the price moved away sharply, no inversion just yet, we're watching. And the inversion is it going back to its average, right? Being able to fill that space, right? So this is a gap fill inversion strategy. So we're looking for those, the price jumps up, right? But we're also looking for it to be able to fill that space. So that's where the inversion piece comes into play. And the fair value is making it FVG or fair value. We want to be able to make sure that we're getting a gap that has the potential to fill and not just carry up or have that momentum to go up, because sometimes gaps, even though we want them to be able to fill that empty space where they just left, right? A great depiction of it's here. We want them to be able to fill that empty space where they just left. As we can see, it's done here, but there's sometimes when you'll have that gap, but maybe it's a momentum play, right? So that's where that fair value or FVG comes into play to be able to make sure we're not catching momentums, right? There's no inversion yet. We're just watching. Step 2 or stage 2 is going to be the approach. The price is moving towards the gap within 50% of the gap size, and a magnet effect is starting to gap and is pulling the price back down. Stage 3 is going to be the acceptance. The price closed inside the gap boundaries and the entry zone inversion is detected. No commitment yet. 60% of the trades enter here, and there's about a 60% win rate of what we're seeing when the trades enter this accepted zone, right? I'm going to see if we can get trades to enter this approach zone because I wanted to diversify a little bit more just to see how well we're able to have this strategy perform. All right, bet. Then we have stage 4, which is the commitment, super rare. The price is accelerating through the gap, with clean candles. What is a clean candle, right? So this commitment right here from the bears is what we're talking about, stage 4, right? We're seeing the price accelerating through the gap, and there's clean movement through the bears, right? That they want to be able to push the price through support levels, and they were able to successfully do that. So that's what we mean by stage 4, right? We have clean candles, multiple candles, minimal wicks. Minimal wicks equals conviction. So what is a wick? A wick are these things that are poking out this candle right here, right? So a clean example, whenever you see a wick populate or wick form, that's letting us know that there's rejection, meaning that whomever is in control, let's look at this candle right here, right? With these 3 candles here, or 4. Let's start with this bear bull one, excuse me. They're trying to push the price up, right? They're trying to push the price to resistance levels, but it was rejected. It was rejected 2 ways: a smaller body, which is a doji, right? That lets us know that there's indecision. In addition to that, there's also these wicks that are populating. Those wicks are letting us know that there's rejection there. Same thing with this red candle, right? Even though it's a little bit bigger body, but we're still seeing wicks on the top and upper and lower, for less, letting us know rejection. Then we have a bearish doji here, both rejection on the candle size and on the wicks as well. So the wicks, again, is just rejection. There isn't really conviction from either side. So best entry, only 10% of the trades, but clean moves, and the win rate is about 58%. Then we have stage 5, which is the resolution, gap fills. The price reach far side or rejection reversed. Most entries happen here, 55.4%, gap filled already. We're trading the inversion, not predicting the fill. So this is what happens for when the strategy is trying to look for a gap. So a fair value gap exists on the 5-minute chart. It should be 1 minute. We're using 1 minute data, so I need to fix this. That's one thing I just noticed. 3 candle patterns with the gap between candle 1 and candle 3, and the gap size is greater than or equal to 0.01. So think of it like this: the market left a hole, is now waiting to see if the price is going to come back to fill it. Stage 2 is going to be, we're going to confirm the inversion on the 1 minute time frame. So that makes sense. So the 5 minute is used to be able to detect gap, and the 1 minute is used in order to confirm the inversion. So we have a multi-time frame strategy going on here, right? And same with the same data. So the 5 minute is going to be used to detect the gap, and then the 1 minute is going to be used to confirm the inversion. The price closed through the gap on the 1 minute chart, excuse me. The bullish inversion is the gap below. The price closed below. Now inversion, we're going to be bearish, and we're going to be buying puts when the gap is below. When the gap is above, we're going to be buying calls because we're bearish on the market. So think of it like this: the gap said go up, but the price went the opposite way. That's the inversion signal. Now we're going to have VWAP distance. VWAP is the volume weighted average price. So think of it like this: VWAP is the fair price. We need a distance to confirm that the market has picked a side. So the price must be greater than or equal to 0.05% away from VWAP. Why? Too close to VWAP, we're going to be in choppy, low conviction moves. We want distance and directional bias, right? That directional bias could be either a call or a put. Mandatory, no exceptions. If the distance is less than 0.05, we're going to skip the trade. And then step 4 is going to be ATR. The current ATR, average true range, and the session median ATR. Why? Low volatility equals low movement potential. We need gas in the tank for the move. Haha, it's the first time I need seen it that way. So ATR equals the average true range, and the period is going to be 5 minutes on the 5-minute chart. Again, multi-time frame here. So think of it like this: we're checking to see if there's enough wind to fill these cells before we leave the port. If all 4 items are green, then we're going to enter the trade. This is how we option selection. We're doing ATM. Now remember, we had a whole conversation, ATM, OTM, and I think I can get this down a little bit more, such that, yo, this is crazy. I just noticed this. Again, I think if we can fix this to be a little bit more OTM, out the money, and not super ATM, right? ATM contracts are contracts that are at or near the current price, and they allow us to be able to exploit these gaps a little bit more. And here's the premium. So we're paying anywhere between $10 and $500. Now that's fucking crazy. I'm going to cap this to about 80 bucks. But again, the option could only trade what it can afford. And the spread that we're looking for is less than 5%. Tight spreads equal better fills. And expiration is going to be 0 DTE. 0 DTE expiration for max gamma. So this is how we're finding the strike. We're finding the strike with the distance, find strike closest to the current price of QQQ. Delta must be anywhere between 0.4 and 0.6, near 50% probability. And that's what Delta also tells us, right? Delta tells us one of two things when it comes to option contracts. It tells us the for every $1 movement, the option contract, for example, if it's a delta of 0.4, it's going to move $40. Why? Now remember, one option contract equals what? 100 shares. So for every 100 shares, we have to be able to multiply it by what the delta is, right? So 100 times 0.4 is going to be $40, or 100 times 0.6 is going to be $60, right? So, and delta also tells us the probability of profit. Now we have a 40% chance of this option contract to be able to expire in the money, and we're printing money, or 60% chance, right? But I think we can squeeze that a little bit more, because that gives us a super tight range, and I think we can make this a little bit better. If they call for calls, look for strikes near the current price. For puts, look for strikes near the current price, and the strike price is going to be the price that we think the option contract is going to go to, right? So it's like being able to come up with the agreement with the market, right? So the market is currently priced at, let's give you for an example, 620, but we think the market is going to go to 621. So we should go find a call option, right, that allows us to be able to take advantage of that. So here's our TP, or our take profit, or our exit rules, right? And what I'm going over is the rules and instructions for our strategy, right? So this is my process, and I think I've brought this to you all again, but let me just go over it one more time. With my process is that we're starting with the idea, right? And then we want to be able to truly flesh out the idea. Once we flesh out the idea, we're going to backtest, and maybe we're going to bring in some machine learning, who knows, right? And that's on a case-by-case basis. But I want to fully go through these 4 steps before I even get to the bot development, right? Most people just want to go straight to the bot, but like, what's the point of developing a bot if it's completely trash, fam? So that's why I want to go through these 4 steps. If it doesn't work, then just trash the strategy and just start over, right? So we're here on step 1, but we're eventually going to go to step 2. So we're going to exit whichever happens first. No holding for maybe. And this is our position sizing. We talked about that already. So this is a quick reference card on what we're needing. Again, I think this can be a little bit more aggressive than what this is right now. So for a call, what we're looking is for a bearish fair value gap. The price is currently above the price. We're looking for the price to close above the gap, the inversion that's already happening. And we're looking for VWAP to be greater than or equal to 0.5. And then the ATR must be greater than or equal to the session median. And this is where we're going to be buying the calls at the money and at the money puts as well, right? So let's now review our back test. Where you are, there you go. All right, so here's the current back test. I'm not going to go over too much of this already because we kind of already spent some time doing this, but I want y'all to see the file. I built the file using Python. And these are the libraries that we're bringing in. I'm bringing in Polaris, which is a faster pandas. The reason being so is because it works better with larger data sets. NumPy is going to be the calculator for Python. And then we have PyArrow, which makes it a little bit easier in order to actually go through and read the data so it doesn't take a year and a day. And then we're going to have our gap stage tracker such that we can be able to understand what type of signals we're getting. So again, as we stated before, all of our strategies start with $100 because we want to be able to dispel the notion that you need hundreds of dollars in order to trade options. We already talked about our sessions. We already talked about how the fair value gap is detected. So most of this stuff I'm just going to go over, but I want you to see the code, right? So you can see it's really not that hard. And another thing I want to be able to bring up is when it comes to the slippage and making sure that we're modeling fees, right? I want to make my back test a lot harder than what it is for actual trading, right? So I'm going to make the fees twice as much fees, right? And I'm going to make the slippage a little bit harder so we can model what real world trading can be, right? So that's why it's a little bit more aggressive here than what we'll see in the actual market. And here's our data classes in order for us to be able to detect the gaps, right? The dynamic position sizing, the version control management, because who wants to be able to go through each file case by case? So let's have our backtest do this for us. This is how we're loading the data, and we're vectorizing it with Polaris, right? The reason we're going to vectorize it is because it makes running the backtest a lot faster, fam, a lot faster. And here's how we're vectorizing it. FVG detection, right? So if it's a function that we can vectorize, we're definitely going to do so. It just makes the operation a lot faster. I'm pretty sure most of these are vectorized. Yep. VWAP and ATR calculation vectorized as well. And then the option selection, we've already talked about that. And I think there's a little bit more room to go with regards to the option selection. But I want to run the backtest first so we can get an idea how well it's doing now. So that's pretty much the backtest file, right? So we can go through it. And here's the backtest engine, what's actually going to run the backtest, right? So we love it. All right, GUAP, let's go ahead and run our backtest so we can get an understanding or baseline of how well our strategy is performing or maybe isn't performing. I need to go get a Conda environment, so give me 2 shakes of a second. And what is a Conda environment? It's like having a garage with all the tools that you need. Instead of having to re-download it every single time, right? Conda list. Right, this is all the libraries, Python libraries that I'm going to need when it comes to algo option trading. So I have it in this Conda environment, Algo baby. Whenever I need it, I just bring it in. How you know you're in the Conda environment? You see here it says base, right? We're not in it. Algo baby, we're in it. All right, so let's go ahead and close you. Now I need to go get the file. Where you're at. All right, here's the file. Python run. So we're running our backtest. What is a backtest? The backtest is being able to take your strategy, throw it in a time machine, and seeing how well it does on past data. The school of thought is that if the strategy does well in the past, then there's a likelihood, not a guarantee, but there's a likelihood that the strategy will do well in the future. So the strategy is performing. It's going right now through 2024. And as you can see here, there are trades coming in. Some good, some maybe not so good, but let's see how well the strategy goes. So it's able to go from 100. It's right now around like $400 or $500 for this strategy. So let's see how well it keeps going, or if it's going to regress. I don't know. So the strategy just crossed $1,000. Remember, it started at 100. It just crossed 1,000. And let me know if the vibes are too loud. If you want me to turn it down, I can. Let me know if that's too loud. So let's go over our back test. We had 168 trades. The strategy started at $100. It was able to turn that $100 to $2,168.63 via the 168 trades. We had 361 days available to trade, right? We only traded 161. So I like the selectiveness of it. It peaked at 2,200, but we gave back some of the profit. The Sharp ratio is 0.39. You know why? Is because this drawdown is a little bit higher, right? What is the drawdown? At one point in time, the strategy went from $100. Let's call that 77.40. Then it went to 77.40, but then it was able to rally to 2,100. So that's not that bad. So out of the 168 trades, we have a 62% win streak, or win rate, excuse me. So 6 out of 10. The best trade was $61. Worst trade, best trade $161. Worst trade was $93. Average hold time was just under 3 minutes, and then our profit factor is $3, right? And what is a profit factor? So for every dollar that the strategy lost, it was able to say, you know what, I felt so bad about that. It's going to bring us back $3. And here's the monthly breakdown, right? So you're seeing we started off the year strong. Then we had a little bit of a tumble in February and March. You would think the lovers month will show us love, but yes, it didn't. Then we climbed back again, right? Then we had a little bit of a struggle in May. Summer months were kind of tough, right? Then we climbed back in, okay. So, I mean, it's kind of good. So there's room for us to be able to grow with this strat. I'm not going to hold you. Calls are performing a little bit better than puts, and that's kind of interesting. Normally it's the opposite, but that's nice to see calls ahead now. And then our bearish is performing better. That makes sense because bearish are going after calls. So that makes sense. And then our bullish needs to be a little bit better. And then our win rate based on the time of day, 9 a.m. As soon as we catch the market open, right? As soon as we catch the gaps, that's what worked out for us. But these intraday gaps not really working out as for that 10 o'clock hour. And then for days of the week, every day besides Monday, we're over 60%. All right. Let us baseline comparison. We went, oh, this is still baseline. All right, bet. So what I want to do now, let's go ahead and open up a Claude code session. Then we're going to break this down, fam. I'm going to get the Opus 4.5 model. Now I want y'all to follow me, right? We started at 2100. Let me just go ahead and put this in the chat right now so we can just keep up where we started and where we're going to go. Right? So this is where we're at right now. So I just want to keep up with it. All right. What I'm going to say, again, I've been trying to be able, my fault. All right, hold on. There we go. That should be a lot better. I just had to move the stand real quick, but what was I saying? I've been trying to do a little bit better with my prompt engineering when it comes to using Claude Code. So again, it could be better, but I've been trying to do a little bit better things to use Claude Code a little bit better. So what we're going to say is you are a senior Python developer with expertise in 0 DTE option algo strategies. We need you to review the following strat to gain context before we dive into our work. So we're going to give it this strategy right here that we've already ran, and also this one here to gain. Review the following using your, well, that's kind of loud. There we go. Using your tools and resources to gain context. Then when you output, this is going to be for the duration of the session, but keep your responses under 328 total tokens for output response. Again, use your tools and resources, i.e. terminal commands and the like, to gain context. Well, all right, bet. So now that's sliding. Now data slide. And I love the fact that you just said, fuck me, and just read it like you were going to read it. That's crazy, fam. That's crazy for you, kid. You said, you know what? I'm not even going to listen to you. Won't a hater hate? That's crazy. All right, haterami. Core logic, we already went over that. All right, bet. I'm fully contextualized on Gappy Baby. What would you like to work on? Here are the results from our recent run review. And let's find out why winners win and losers are losing objectively before we proceed with our work. Use RG, BAT, Echo, awk, and other terminal commands to gain context. Run in the conda environment, fam, big bruv. Run in the Conda environment using Python, not Python 3. Then advise findings. I appreciate that, big bruv. Get me right. See, that's the thing I kind of need to fix. I don't understand. Y'all let me know if there's an issue with the frame or whatever. A slide. Analyze losers and winners. I appreciate you. And I want to figure this out with the frame because I don't understand. Thought I fixed it. All right, deep dive. I appreciate that. And if y'all do have any questions while we're working through this, fam, let me know. Like, each one teach one type, right? I'm just here behind the keyboard, but that doesn't mean I'm not open to conversation or open to being able to take different feedback from the people them, right? So if y'all do have any questions, comments, concerns, thoughts, fem connaît, as the Zos would say. Wanna hate or hate. I appreciate this. Y'all watching it. This thing is only go crazy. All right, entry time analysis. 70% of the exit. 3-minute deep dive. So let's see what is your census, fam. Key finding. 70% of the trades exit at the 3-minute. This is where the variance lives. 51% when, 51.7 win rate versus near 100% for TPs. Winner characteristics, higher ATR, more volatility, faster moves to TP, shorter hold times, 234 versus 290. VWAP is 0.3 on the winners, right? And stage 2, but only 70% of the trades. High ATR plus VWAP equals a 70% win rate. Losing characteristics, low ATR, VWAP, stage 5 dominant losers. So we represent stage 5. So inside ATR filters to lose, tightening to the median, not 50% will boost win rate. VWAP distance sweet spot perform the best. Currently catches is 0.05 catches. The time exits are the battleground where the strategy needs to hit. Before we do that, what is the min and max delta and premium and strike range for this strat? Also, does it take gamma into consideration when selecting options? Why do I want gamma? I mean, gamma is like the little battery pack for delta. So if gamma is high, delta is going to be moving. And remember, delta is how much our option contract is going to move, right? So gamma is high, delta is going to be like, bro, I appreciate you. And then they just going to slide together. You zill me? And I'm going to try to be very expeditious. Shout out to Tip, as the folks with them say. We have to calculate gamma, right? It's not, trust me, let me dry the boat. I just answer my questions. All right. That's crazy. That's crazy. Actual. Okay. Actual. Strike. No gamma, because the strategy does not use gamma for option selection. Y theta data file lacks it. Nope. We're going to need to use Black Scholes, right, in order to add gamma. Let me give you an example of a strategy that does it. I keep going back to second chance because I'm not gonna hold you. Let me see. gamma. Okay, black shows gamma. Perfect. Review how another strat we have does it to gain context before we update the file to do the same. But just adapt to our strategy. Use your tools, fam, to get what is going on here. Don't just look and be like, oh, we Gucci them. Nah, bruv. Nah, bruv. Ah, perfect. It's actually listening to me. It's actually listening to me. I feel so good that you're listening to me. I just had to make sure we Gucci. I just had to do some QA on my work. But we Gucci them. We Gucci them. All right, Kings. Okay. Import scripty strats, norm, time of day, normalize gamma to the 0 to 1 scale, hybrid scoring. All right. Let's do it. And make sure we're Gucci. I hope it doesn't get colloquial and like start using my terms for his terms. Like, nah, bruh. Like, stay on your lane. Stay where you at. I would appreciate that. That is wild. The fact that that's at 400. 400. Stupid. That's what's up, man. Show the people them. We here to work. 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 Oh, you know what I forgot to check? Let me go check something real quick while you are trying to output. I appreciate that, bruv. How can you beat that? Oh, my fault, my fault. No, I like where I'm at, bro. It's still 93. You feel me? I like where I'm at. I won't got to do too much. We won't got. Really, that's interesting. But it's popping right now. All right, run it on the backtest. Test. All right, bet. All right, get me right. Get me right. I thought so. Get me right. Well, let's go ahead and run this back test. Let's see. Oh shit! Almost ran the wrong one. Almost ran the wrong one, fam. All right, let's go ahead and run it. Okay. We're in super. Oh. Then you get to a point where it's like, all right, gamma's working for me. I really think I need to adjust the I know what I'm saying. Let me let you stay. I really need to adjust. What got 100%? Yeah. 65%, 121 trades. We kind of dropped down with the trades and the amount. That's because, all right, I'm not gonna hold you. Gamma inversion 15. All right, let's come here. I needed to update the delta min max too. Okay, hold on. Hold on. Let's actually think about this. So move the delta min to 0.30 and then move the premium max to 0.85 and keep everything else the same. All right, I thank you. Y'all mind if I just switch up the vibes real quick? Y'all wouldn't mind that, would you? Just switch it up real quick. Let's just switch up the vibes real quick, yeah? All right, and let's see our performance. I just updated the delta min max and the premium, so that should be gives us a little bit more wiggle room. Yeah, can I tell you? Just because you have more options, is it always the best thing? Is it always the best thing? Yeah. I think this is a I think this is a TP thing. Let me keep it where it's at. Let's go run it on 23 real quick before we do anything else. Let's go run it on 23. 2023. 4. I'll bet I can say the year in the backtest file. Let me see if you actually listen to me. Bet it listens to us. All right, we're running on 23. Let's run it on 23 real quick so I can get it out of sample example of how this strategy is going to perform. I want to get an out of sample review. Drawdown is drawdown is a little bit higher. Not going to hold you. Drawdown is a bit hard, but a bit more with the volatility. Yeah. All right. 59. All right. What I'm really thinking, fam, what I'm really thinking is we need to drop these TPs a little bit more. All right, let me go to 17 and then I think. Okay, hold on. Before we try to overly complicate this, let's do this. FVG max. Okay, maximum active. Okay, tracks per day. Let's go to 80. ATR threshold. Let me drop that down to 28. And then let me keep the VWAP distance. And let's see what we do. Let's see how it performs. Let's go back to 2024. Just updated a few things. And let's see what it do. I'm glad that I was able to keep track of that by itself. That's what's up. I should have put 23 in the chat. But hold on, I'm updating on 20. I'm running on 24. So let's see if our little adjustments did help. And I think I'm going to be bringing in machine learning with this strategy, because just being able to go from parameter adjustment to parameter adjustment is going to get a little bit mind numbing. Even though sometimes I like to do it, but just for the sakes of being able to move this along, I think just bringing in a little bit of machine learning will definitely help us out to find the optimal parameters for said strat. So I think that's going to be the next route we're going to go. Yeah, we're going to go machine learning, fam. All right, that's not bad. That's not bad at all. All right, we're going to go machine learning. Where you at? 55%. Damn, that's you kind of dropped a bit. You kind of dropped a bit. All right, let's go here. All right. How can we use for this strat? Let's discuss before we actually do this. Let's discuss, yeah. Oh. Let me go ahead and put the results in here. I kind of had a little bit of regression, right? But I added gamma, and I kind of want to keep that there. So we went from about just under 2100. We're about 1500 right now. But I still think there's a lot of room for improvement with said strategy. My recommendation is Optuna plus walk forward. Okay. I was going to say that as well. All right. How can we do this with Optuna and walking forward to ensure there is no overfitting? We're controlling for bias, right? And can allow the ML to do what it does best with regarding to finding the optimal parms for this strat. Just a little bit. I think I'm going to bring in a little bit of a regressive model in order to do this, fam. Wait. Explain before you create any code, bruv. I need you to explain it. I just want to make sure we're on the same page and we're not tripping here. I'd appreciate that, bruv. Where we at? All right, it shouldn't take this long to be able to output a response. Bruh. All right, here we go. Fair enough. Let me break this down properly. Walking forward in Optuna optimization, we're going to train on 2024, find the best parameters, backtest on the same data. This is overfitting. Walk forward, we're going to train on January through July, find the parameters, test on January through June, test on July, unseen. Train on February through July, then test on August. Train on March, then August. Okay, beautiful. Only keep arms that work across all tests. How it works, the data split. So remember I talked about we're going to be bringing in a little bit of machine learning and walking forward. So this is, and again, it's on a case-by-case basis, because sometimes we create strategies and they're just ready to go to step 5. But there are going to be sometimes we're going to need to bring in machine learning, optimization, and walking forward. So that's what we're doing here. Train. Okay, beautiful. Each window is independent. The model never sees the validation data during the training. Opportunist's job: process the set of arms, run back tests, measure the results, using Bison to become smarter each next trial. Okay, I love it. Yes, I have. We have data for 2023. That is Gucci. Now, based on results from what should our objective be? Review using terminal commands, right, to gain context. And is there any other items we can pair with this to ensure we're doing this correctly, right? Advise: keep your responses under 412 total tokens for response moving forward. I would appreciate you actually listening to me. I really would appreciate it. Beautiful. Get me right, bruv. Welcome, people. If you do have any questions, any comments, or any other recommendations based if I can do this a little bit better, let me know. Each one teach one, right? Metrics, delta. Delta is the change. That's kind of funny here. And delta is also probably, never mind. 43% better, 15% improvement, improved, similar. Recommended is a Serentino weight composite. It penalizes the... Wait, what? Say that again. What are we using for the objective and why? Okay, so the objective is going to wait. Why you should, okay, Serentino, profit factor, win rate, trade count. Okay, I love it. Why not use the sharp instead of defend your position? Don't capitulate. Just explain yourself, fam. Oh, why not pure sharp or EO? The PNO's risk and reward streak ignores the risk. Pure sharp treats upsides and downside volatilities equally. We could only care about the downsides. Okay. Why Serentino is greater than sharp for this strategy? The sharp formula is the returns minus the risk-free divided by the total volatility. Serentino is returns minus risk-free, downward volatility only. The core issue is that the sharp punishes big winners. If you hit a 62% trade like 2024 did, sharp sees this as volatility and penalizes it. That's backwards for 0 DTE, where the whole point is asymmetric payoff and small losses and explosive wins. Real example from your data, but sharp says both are volatile, both are bad. Serentino only looks at the 22% matters. The 62 is exactly what we want. Okay. All right. Bet this works. Now, our can we vectorize or use pre-index for running this, and for running this, advise before we proceed. That makes sense. I really want to get this if it can be like sub like 10 minutes. That'll be beautiful. All right, each opportunity trial runs a full backtest, saves every trial wasted compute, solution pre-compute every parm independently, once on startup, pre-compute, and then once per trial, only dependent parms, expected speed up, every trial, okay, optimize once, okay, filtering every trial, 10 times faster, 30 minutes to 2 to 3 minutes for 100 trial, okay, but this doesn't take away from what we're doing or mess with the integrity of the data though, right? Explain that. I would appreciate that, just to make sure we're Gucci before we like actually move forward then. Okay, zero impact on data integrity. Okay, beautiful, 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 beautiful. All right, let's create it. Call the file, Gappy baby. Oh wait, Bertha, Bertha Gappy. Big. Nah, this is, if you know, it's Big Bertha. Big Bertha got you. Big Bertha got you. ml.py. Let's proceed. Following OOP, object-oriented programming, dry, and then SRP, and then solid. Best practices for this, fam. Big Bertha got you. That I'm actually going to be running it so we can see how well this works. And that's what's up, man. Y'all get to see like legit machine learning. So that's real interesting. If you do have any recommendations on how it should be doing this, or if there's anything that y'all think could be a bit better, you can let me know. You can let me know, but I'm super excited about this gap fill strategy. This is, welcome aboard. I do appreciate you. What I do appreciate about this gap fill strategy though is that, number one, this is something that like I kind of wanted to do for a while now. Number two, it allows us to be able to take advantage of when, remember I showed y'all earlier, but let me just reinforce this while I'm waiting on the code to output. Like these gaps, fam, like these gaps happen. Let me go back. So y'all see 2 back-to-back days we had gaps, right? We had gap on a Thursday, or on a Friday, excuse me, and here's a gap on a Thursday, right? So that's what I'm like, man, I want to be able to take advantage of these gaps. Let me go back to Wednesday, see if there was another gap. Gap down. So we see our first gap down example right here for Wednesday of this week, right? So we saw 2 gap ups, and here's a gap down, right? So our strategy could trade both gap ups and gap downs, right? And gap down is when the price opens a lot lower than when it closed, right? It's trying to find its way back to its average, but the bears were taking control of this all week. Damn, QQQ has been volatile this week, fam. Let's go look at Tuesday. A little bit of a gap down. So y'all see Tuesday and Wednesday were gap downs like a mug, but the bears tried to, excuse me, the bulls were pushing that price back up. So Tuesday and Wednesday gap downs, Thursday and Friday gap ups, right? Let's go look at Monday. What was Monday? What was Monday? Hold on. You kind of can see it. There we go. Monday gap up. So just in the past 5 days, right, we had 3 gap ups and 2 gap downs. Just in the past 5 days, just looking at the data, right? So that's why, bro, this is a home run. I'm not gonna hold you. I really do think this is something that's gonna be like, it's gonna pay dividends for us. So let me go get our content environment ready so I can go run this machine learning. Here's the content environment for everything I need with regards to machine learning, right? Big Bertha. Now everything we're going to need for machine learning is in this content environment, right? So I don't have to re-download it consistently. I'm going to clear, and then you should be done in a bit here. Yeah. So as soon as you're GUAP, we can run our backtest and see how well it performs. Real interested to see that. All right, bet. Big Bertha got you. Okay, I got you. Thank you, though. Thank you. Here we go. Here we go. Here we go. Bet. All right, we're running our back test. Parallel. Okay, created a new study with just don't crash. All right, bet. Now our back test is running. Now each trial is running a back test, right? So that's why we're going to be going. I should have started at like 2. Let's see how fast each trial. Okay. So it's not that bad. It's not that bad. It is not that bad, fam. Now, I'm not going to hold you. This is going to be a little bit monotonous, right? But we're still getting the work in. Okay, come on, fam. Is it stuck? I would love a little bit more feedback just to let me know that this is actually working. Trials 0 and 1 was able to finish a lot faster. But it's kind of stuck on trial 2 right now. Okay. Gang, that was... Well, this is going to be crazy, fam. If we got to wait damn near this long to be able to do it, this is not a good viewing experience. I'm not going to hold you. How much is TradingView? Is it tied to the particular brokerage? First time seeing you on YouTube. I subscribe. Oh, that's what's up. Guy Marcy, I really do appreciate you. TradingView is completely free. That's why I love use TradingView. TradingView allows us to be able to take advantage of understanding what the market is doing, right? We can see beautiful charts like this completely for free. Now, the only limitation is, right, if you want to open up multiple charts, you can only do, I think, 3 within their limits, but TradingView is free to use. Like, you don't need to pay for TradingView at all. So if anybody tries to get you to pay for it, run away. But you can use TradingView for free, and it allows you to be able to look real time what the market is doing. You can see different candlesticks. I like to use the 1-minute candlesticks, but you can go to 2. Maybe we can go to 2. I can go to 3. I can go to the 1 hour. If I want, I can go to the 1 day. If I want, this is all free. Let's try 6 months. And that's crazy. Or we can go to one range, right? So we can have like all different types. That's an interesting one. I probably want to spend some time with. But no, TradingView is completely free. I don't know if we can get sub-seconds. Oh, no, it's a minute. You got to pay for the sub-seconds. But TradingView is free. There's no cost with being able to use it. And I also thank you for being able to subscribe. I really do appreciate you. If you do have any questions at all, any other questions, let me know. But TradingView is free to use. And it definitely helps out with being able to get your algos right. Have you created any strategy? Macy? G Macy or GM? Hope I didn't pronounce that wrong. This is wild. I don't know if this is like a good or bad thing. Like, it's sliding right now, and it's actually working, but it's just taking a little bit longer. Okay, now we're actually moving. All right, while this is going, y'all give me a second. Let me go grab some Yo Quiero Agua. Give me 2 seconds. So hopefully when I get back, this will be on like 30 or something. Hold on. No, I'm a programmer. I use Claude Code. I'll check out your other videos. Oh, that's what's up. No, I use Claude Code all the time. How long or what kind of projects do you normally create? Any algo builds? How long you been a programmer? That's what's up, and I really do appreciate you joining the channel. Any insight that you can provide, I definitely welcome it with open arms, fam. All right, this is like taking super long. I'm not gonna hold you. And the first 12 were pruned already. Is there a faster way we can do this? but still get what we're looking for. Yes, the penalized. Okay, 4 jobs. Too many prunes. The thresholds are too strict. The minimum trades, the 15. No, bitch. No, no. I was gonna say minimum trades to be. No. I really feel like I should be just doing this manually, bro, because. All right, starting capital. You basically just created a backtest, fam. Okay. Where's the minimum trades? Oh, crap. Minimum trades. No. We were actually going to have it higher. 30 years, but 2 years AI a month ago. I haven't written any stock market. Okay. 30 years is a long ass, bro. You've seen some things. Yeah, you've seen the whole transformation from like GP, not GP, what the fuck is it called? Graphic cards. Being able to use from like going from using just from like a regular gaming station to like that actually being the power of what's getting these AI up and running. Well, that's what's up, bro. If you do, or ma'am, don't try to assume here. If you have any insights on like what we're doing or anything at all based on like just programming, right? Do you normally write in Python? Like, what is your language of choice when it comes to like coding or when you're just like making different projects? All right, actually have it higher for the minimum trades. Review the file and then advise if we're doing something incorrectly before we proceed. Because this right here is just getting nuts, fam. I feel like I can do this better manually. Oh, 801. So file 801. Or line number 801 for the minimum trades. Now I know. So I can update that accordingly. Okay. The distribution, so 6 out of 12 months has a right. Why increase the test window to 2 months? That doesn't make sense, fam. Hold on. Oh, snap. Look, it's actually working now. Look at that. It's actually. So we just finished 15 and 15 was, wait, that's negative. Wait, why are the values negative, fam? I think I just might as well just let this go. Why are the values negative? If you can explain that, that would be beautiful. Is the penalty score when the trades is less than 15? The results, okay. The trial test parms are on a 1 month window. The parms are restrictive. Only 5-10 trades are generated. Use 2 month testing window. The count could be higher. Bruv. All right. Let's take a step back. Let's take a step all the way back. What does the strategy currently know now? So it knows that there is a gap that formed in the market. What else is the strat aware of? Let me dry the boat, because this right here, this right here is okay. Gappy Baby knows at entry. Let's audit what the strategy actually sees. It can see the fair value gap if it inverted, the VWAP distance, ATR. So the VWAP is going to be how fair of a price are we getting? Bet. ATR is going to be how volatile is the price moving? Bet. We're going to know delta, gamma, the premium and the spread. What it doesn't know is the gap fill percentage, how much of the gap was filled before the inversion, the volume at inversion, the trend context. Is it with or against the trend for the higher time frame trend? The time of the gap, prior gap behavior, and the underlying momentum, the option ratio. The strategy is essentially gap form, price cross, volatility exists, buy at the money options, exit in 3 minutes. Is there a specific context you want to add? Double check that the gap fill percentage isn't used. Also, the trend of the gap as well. Let's double check that. Let's double check. Yeah, we're still humming along there. You're right. I was partially wrong. The strategy does track the gap stages, but there's an issue. It doesn't. This is just for analysis. It doesn't use it as an active filter. The gap stages is logged but not filtered. I understand that. The strategy enters any inversion strategy. Excuse me, any inversion, regardless of the stage. The stage is in the metadata for post analysis. Gap fill could only enter if the gap is 50% filled. Stage at gap, is the gap inverted or against the trend? All right. Would it make sense to use ADX for the trend context or no? Average directional index. ADX allows us to be able to see how strong is the trend, right? The strength of the trend. Not necessarily which way is it going, but how strong the trend is. So it may not make sense here, but it may. Let's have the conversation. ADX for analysis. ADX tells you strong trend, choppy. It doesn't tell you the direction. For this strategy, we have mixed signals. Low ADX mean reverting, gap tends to fill in the chop. Risky, we're fighting the trend. You're trading inversions, contrarian. High ADX means you're fading a strong trend. Historically low win rate. Simpler alternative. VWAP distance. Okay. Might take ADX as complexity, but VWAP positions already gives you the trend context. The price is above. Okay, with the trend, against the trend, fighting against it. You should only take the inversions with the directions that align with the VWAP side. Want me to test the VWAP alignment filter first? You still want. All right. Let's objectively, via terminal command, test the VWAP alignment filter before we add to backtest. Let me see how you're doing. Yeah, you're still bullshitting away. All these Prone here, prone there. That would be Gucci. That would be great. Now analyze. Now I thought, and again, the machine learning is still going on in the background here. But that's going to yield anything. But it's still running in the background. What am I looking for? There we go. VWAP analysis, only 2.1 win rate difference, not significant, but look at the direction breakdown, call above, call below. No, the simple VWAP alignment doesn't work formally, but the pattern is asymmetric. Calls work when we're with VWAP, puts work when we're against VWAP. Suggestion, don't filter. Yep. No. No. Let's still feel like we're missing something here, fam. I really still feel like we're missing something. All right, let me go look at this strategy real quick. Let me just put eyeballs on it. All right, so the VWAP distance, the minimum distance for VWAP relaxed from 0.5. The ATR must be, okay. This is on the 5-minute time frame. 25-minute, a 5-period ATR, 25-minute warm-up. Wait, so if I do one, wait. I think I just figured this out. It's waiting 25 minutes in order to determine if the ATR is good. No wonder. Okay, let me just start there. Let's just start there. I feel like, yeah, you bullshit. Let's start there and we'll be able to get an adjustment. All right, bruv. I'm seeing a little bit, but not like super that much, yeah. All right, let's go back to the drawing board. So I got the ATR problem. The minimum gap, okay, 1 pip. The maximum active FVG, so I increased that tremendously. The minimum VWAP, okay. Delta, exit rules, I already did that. Can we go from 1 minute to 5 minute? Can I go 1 minute? Wait. You still bullshitting? Yep. Can we go from 5 minute to 1 minute for the FVG time frame? That would be great if you can just give me some sense. Some sense of this. You doing a little testy test. Gaps per day. Oh wow, 81. All right, let me trade off more signals, more no. Okay, 5.5 times, 5.4 times more, but 2.1 times smaller. The average size. That's interesting. But are they meaningful for 0 DTE? The 3-minute moves. You're testing on the 3-minute now? That's interesting. The 1-minute gaps are half the size of the normal market noise. The typical 3-minute QQQ move is 0 plus 25 cents, right? A 1-minute gap at 0.2 gets swallowed by the regular volatility. Yeah, let's go to 1 minute, but with higher min size. Let's still go to 1 minute. Give me a higher min size. That'll be dope. Yeah, all of this was resampled, fam. So it'll be easy to go to 1 minute. That's what's up. You still bullshitting? Yeah, you still bullshitting. Bro, if I would have waited for that, I would have been so mad. I would have been so mad. I'm glad that we like decided to move on and like not just sit here and wait for the back test. All right, don't tell me you're running to the back test, because that's what I'm about to do. Okay. I got it, fam. You like doing the most. I think our brain solved it. I love my brain. I love my brain. Goodness gracious, man. When I say sometimes you gotta listen to yourself and like see the conviction. I love my brain, bro. We figured it. We cracked some things. I didn't even need machine learning, bro. Oh my goodness. I love y'all. All right, let's look what we did. Bruh, we slapped. Just from going, just changing the time frame, fam. We went from like pedantically surviving, right? I think the strategy was at like 2100, whatever it may be. Right now 162 trades, $8,400. There's could be a little bit 71%. A little things could be better, right? But I appreciate where we are right now. Only took me 19 versions. Thank you, but review and let's discuss. Big brain shit, man. I love this. Sometimes you just got to rely on yourself, you know? Bet on yourself, that's what the people will say. Bet on yourself. And that's what kind of this exercise is about, right? Significant improvement. No snap. See what we did? Oh, does it say it on the bottom here too? It says an improvement. Okay, yeah, it says it on the bottom from the baseline improvement. Bet. Let's run on 23. Let me run it on 23. I love my brain. We did great things. Now we're running it on 2023. I still think there's a little bit of wiggle room. There's a little bit of things that we can do to improve this, fam. Yeah, I still think there's a wee bit of things that we can do to improve this, but I like where we're going. I definitely love the direction. I didn't really have to use machine learning that much. It's still bullshit. That's interesting. Let me try a VWAP distance of that. Yeah, look at that improvement. Look at that improvement. Review and let's discuss. Fear of false inversions. That part. Sometimes you gotta like trust yourself, fam. Both improved, still strong. All right, the strategy is finding high quality gaps on both data sets. All right, now let's go back to what the strategy knows and what the strategy doesn't know, right? The strategy knows, okay. I need you to update this so I can like properly see it. All right, can you update? Shit. Damn it, you froze. Hold on. It froze. Give me a second. I gotta close it out. I might as well just get a new session up real quick. We might as well just get a new session. Beautiful. You know what I want to check? All right, we Gucci. I just had to make sure this usage was like okay. You feel me? Give me 2 shakes of a second. I really dislike when Claude Code does that. Oh, in the wrong spot anyway. My fault. Come over here. Come over here. Give me a second. 2 shakes of a second. 2 shakes of a second. Two shakes of a second. I just need to update something real quick. Read to gain context. because I really dislike when it's trying to share personal information. I'm like, bro, don't you understand this is a stream? Give me a second. All right, now we can come back. Okay. Beautiful, beautiful, beautiful. I feel like you just gonna be bullshit. All right. Now we need you to confirm what the strat knows and doesn't before we proceed. Are you serious? You froze again? Damn it, man. All right, so I just need to be a little bit better with this. Don't worry. I do have an idea. Yeah. Oh, I thought you were gonna bullshit again. Beautiful. Yeah. Yeah. For 37 lines, bro. You were just tripping about that. Review and confirm what the strategy knows and doesn't. Oh, you know what I forgot to do? Damn it, my little prompt. I was just so mad that I was trying to share security information. I was like, bro, if you don't like back all the way the heck up. Y'all like vibing right now, fam. And this is supposed to be instrumentals. All right. Okay. I review both files. Let me provide a comprehensive analysis of what the strategy knows versus what it doesn't. So this is what the strategy knows. Why is this? The ATR period discrepancy. The ATR period has 1, but the code says 5-minute ATR, 25-minute warm-up. This is misleading with the ATR period of 1. The ATR is just a true range. The last bar not smooth enough. The strategy document. No, I want to go from using 5-minute to 1 minute, and I'm going to stick with that for right now. For the ATR period, can you confirm it is on 5-minute, not 1 minute data? And if on 5-minute, we want to gauge how we can move to 1 minute. 5 period. Yeah. All right. Implementation versus strategy docs. What the strategy doesn't know. Gap fill volume, gap context, underlying momentum. Okay. Don't worry. I am going to trend context. I need to figure out that. Or we're going to figure out how to do the trend, but just follow me, bro. Follow me. We're going to get a beautiful strat in a moment here. Current. Floor to look up. Let's have a toggle where we could go from 1 minute to 5 minute without an issue, but let's proceed to a 1 minute 5 period for now. I appreciate that. I appreciate that, bruv. I'll implement a toggle for the ATR time frame. Beautiful. Beautiful. And if you can fix the calculation on the bottom of the page for us too, that would be outstanding. Let me update backtest flow to update. Okay, let me do that. So I don't got to keep hitting enter, enter, enter. Let me update the ATR price. Beautiful. Let me see what you're doing. Oh, you still bullshitting. Y'all still messing around. All right, so we go up. We go up. All right, let's go ahead and run it. Oh, we already got our baseline. All right, bet. Let's run it. We're running it on 2024. This is with the updated ATR period on the 1 minute time frame instead of on the 5 minute. So let's see how that impacts our results here. I think maybe, I don't know. What does the people them say? Do y'all think it's going to be better? Do you think it's going to be worse? I don't know. Let's see. Let me just wait. Let me just wait before I don't say anything. We're just looking for ATM. I don't think it's even like trying to find OTM contracts. If we were to bring in just a little bit of OTM contracts, fam, I think that will be beneficial for us. Yeah, we go up. I really think I could just stop you because, like, you're just bullshitting your life away. Review, and let's discuss. Use your terminal commands and tools, resources to properly review the results. It's damn near the same, fam. I had to sneeze a couple of times and I didn't want to, like, never mind. Let me analyze the data comprehensively. I thank you if you do. Yeah, thank you. All right, Gucci them. That really doesn't make sense. You go from kid. Never mind. Let me just stay over here. Let's just stay over here. All right. Best month. Later in the year. That's what's up. All right. All right. What are my thoughts? Right now, the strategy, it still doesn't know a few things, right? So we need to be able to improve on that. Oh, OTM, ATM. Okay. Right now, the strat is only looking for ATM. We want to bring in some OTM as well. Advise how we can do this before updating the code. I want to bring in a little bit of OTM. I want to bring in a little bit. Good call. Let me analyze the current option selection and propose approaches for adding OTM out of the money options. So we can just catch a little bit more of the volatility gain. You feel me? And I think for OTM, I should require a higher gamma. For ATM, just slide how you were doing, right? But if you're selecting an OTM contract, I think I should require a bit of a higher gamma. Yeah. What you all think? My recommendation is B. Damn, you gave me fucking add a configuration toggle to switch between ATM, OTM, or both. Okay. And that's that deep. Cleaner, easier to switch between. The premium range for OTM currently is okay. The options are cheaper. Should you adjust to or for OTM mode? No. Keep the premium the same for OTM. And for scoring weights for OTM, right? We're going to require a bit of higher gamma. Does that make sense? So we can actually get some movement. Oh, I just said it. Should we weight gamma higher? OTM lower gamma might favor the ones more. The cap distance, should we cap how far? Yes. Let's cap to max 5 strikes away. Advise before we proceed with option B. Keep your responses under 325, 28 total tokens, fam. All right. I want to go grab some Algo real quick because I feel like I don't want to be coughing up a storm, fam. So give me a second. Hold on. Got it. Higher OTM weight makes sense because OTM options have inherently lower gamma. So we want to pick the ones with the most gamma to capture movement. Configuration, OTM, cap to 5. Strike filter, only consider OTMs with, okay. All right, let's do it. And we're going to test both. All right, be right back while this is updating the code. glad I came back just in time. Just in time. I didn't mean to yell. All right, let's see what this OTM one does. Here we go. Not moving bad though, bro. And then let me run it on 23. Let me run it on 23. And I think we have our strategy. I think this is ready to go to step 5. I think we are ready for step 5 to be able to actually create the bot now. I think we're ready to create the bot, ladies and gentlemen. Let me have you review these two now. Review and let's discuss. Let's discuss. I want to work on 23 a bit. So we added OTM generated more trades. OTM did generate a little bit more trades. Win rate went down a little bit. The returns went up. I want to get us okay. Should I have this is QQQ. Now, hold on. Want me to pull a trade level analyzer? Nope, 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 nope. No. Now update the list of and provide us of what the strat knows and doesn't. Keep your response under 428 total tokens. Total tokens for output response. That would be great. I think we're getting there. I think what will make sense is to be able to include the excuse me, what the gap fill percentage. I don't know why it took me long to get that out, but the gap fill percentage. If we get the gap fill percentage to be a little bit to implement the gap fill percentage, I think, yeah, this right here. Gap fill age, theta at entry, gap age. Okay. All right. For the gap fill percentage, let me see if there's something on TradingView you can use for the gap fill percentage. Let's go to TradingView and let's see if we can find something on TradingView for gap. Let me make this a bit bigger so you can see what I'm doing. So I'm on TradingView. I'm going to click on indicators, and then I'm going to go to gap fill gap percentage. Gap percentage highlighter, gap measure percentage, gap measure percent. Okay, we have a couple. Trade beat, gap percentage alerts. Which one are y'all thinking? Let me try the gap measure percentage. Let's try that. Then I clicked on okay. Super simple. All right, so we have this. Gap fill. Then we also have, let me go get another one. Gap percent. Auto support and resistance with wick. Oh, we get that one too. So I'm going to click on, see here, source code. So I'll put gap percent just to start typing it out. And then auto support with support and resistance with wicks. So I'm going to hit source code to open this up. Auto support, auto support and resistance with wick signals and percentage gap by friend of the trend. What are the levels though? Last 5 bars. Okay. This is going to be kind of cool. Support levels. This is like just super long. Super long, fam. But I think this would be something we can take and use. So I'm going to go back to trading, Claude code. Let's come here. Gap percentage .md. Paste you here. For the gap percentage, we are thinking about using the following. Review and explain to us before we proceed. Review using head, tail, RG, word count, seed, awk, grep, or other terminal commands to properly get context, then advise if this makes sense to use before we test the terminal commands. Also advise on what the periods are used. Periods used. Keep response under 412 total tokens. And the reason I'm doing keep your response under that is because I need to make sure like we're not going like super crazy. Bet. With this. All right, perfect. Perfect. Now let me know your thoughts. This is a trading view. I understand that. It creates support and resistance lines at intervals from session open to close, percentage, time frame. We actually need the FVG gap fill percentage. My advice, don't use this script. Instead, add a gap fill calculation. You're already track the top, curtain close. The math is simple. Can we, all right, but can we take anything from that script to apply here before we do that? I think the wick support may make sense to add. Yeah, see? I told you the wick support. The wick is rejection. There's not conviction there, right? For the particular signal. So I think that may make sense to add. Formula for zones and the wick logic. Okay. All right. From script, the zone gap. Okay. Detect if the price was wicked into the gap but rejected. Require multiple touches before invert. 2 wicks and a 5 bar. Okay. What we should add. Beautiful. The wick rejection and the multi confirmation ideas are solid additions. You want me to implement this plus the. Okay. Yep. Let's do it. Let's do it. I would appreciate it. And like what I can do is just like bring this over when I'm actually going to use this for the bot. We can just use this code again. So I love that. So let's see. Okay. What's another thing? I just want to make sure. Hold on. That's another thing. Strategy doesn't know. Volume. Trend. I need to figure out a way for it to know the trend. That's the next thing. I think I'm going to not do too much after that. Well, this is kind of cool though. Being able to implement like different ideas into the strat so we can have one master one. Yeah. So that is dope. Okay. And this is the okay. Checking the syntax. Beautiful. Now if you can go update the backtest with this, that'll be great. Honking. That's the adjective you want to use there, buddy old pal of mine. Do we need to update the backtest with this as well? Discombobulated. Yes, the backtest already creates the stages but doesn't call the update. We need to. All right, let's update it. That'll be beautiful. And then after this, I'm not going to hold you. I need to go to Sonnet 4.5. Because obviously just eating up. So I'm at 5% here, so it's about to compact. So y'all just give it a second. I think this is good. We did a lot of great things for. So I'm at 5%. We did a lot of great things for the strat. Now I'm just updating to add this particular metric so it can know. And I think I'm going to start doing that, like what the strategy knows and don't know, keeping like a list of that. So if I want to add something, we can. But it's a nice little improvement there. That would be a nice improvement to be able to figure that piece out. And I hope you don't compact. I hope you're able to finish this without compacting. That'll be super cool. That would be so cool if you can finish this without compacting. Oh, please be done. Please be done. Shit. All right, so we're compacting. Y'all just give it a second and we'll be able to continue. So if you do have any questions while I'm waiting for this, that would be a great time to ask. Y'all had that teacher in school that, and again, I just had some time to kill, so I'm like, all right, bring some couple of things up. I'd be like, don't ask me, ask me. I did definitely had that. Y'all had that experience? I guess what you're gonna do is I'd appreciate if you like came here though. Thank you. So I'm just waiting for Claude Code to be able to come back. There you go. Welcome back to the party. Welcome back to the party. That's what's up. Running a syntax check, so that means we can actually go run the back test now. Thank you. Thank you. Well, this is good. This is good. We're doing a lot of great work. It's just some of it could be a little bit monotonous. But hey, it's the boring stuff that actually gets you paid, yeah? All right. Review using RG, awk, grep, different terminal commands than advised findings. Like, I'm already tipping like 2 hours. I don't want to make this video too long. But I mean, y'all getting great stuff here. This is not like I'm just chatting away, yeah? Interesting, interesting, interesting. Win rate by touches. Now, how can we actually use this? Oh, one thing I need to have the strategy do before I like maybe come back to do the bot a little bit later. Okay. Insight, early stages dominate. Stage 1 and 2 entries have an 83% win rate versus 64 for stage 5. The low touch count, best signals 1 to 2 touches yield 77% win rate, 54% of all profits. The fill percentage all low, less than 25%. Inversions happen quickly before the gap fill significantly. Consider filtering for the touch less than 2 would boost win rate. Prioritize 1 and 2. The new, okay. How can we add it such that the strat knows what market it is in, right? For the trend. Advise before adding code. Now I've tried this. Okay, let's go back. Let me see if I can find something on TradingView. I got to keep an eye out on that too. I think I'm going to use this for a strategy one day. Indicators, trend. Let's see if we can find beer. I took that from here. Trend pivot, trend line pivot, trend wave bands, trend reversal probability. That's interesting. That is so interesting. Or trend classifier. Let me do this trend reversal probability. Script, okay. Trend reversal probability. So what is it doing? An oscillator, the 20 bars. I probably need to make that a little bit quicker. Calculation, RSI calculation. So it's using the oscillator calculation. It's using RSI to be able to see if it's overbought or oversold. We're going to count the bars. This is interesting. This is really interesting to use. So I'm going to copy this. Let's go back to Claude code. I already have VWAP. Okay. Good question. The strategy currently trades FVG inversions without knowing if the trend is with or against it with border. Okay. VWAP regime, EMA trend, opening range, prior, the price versus previous slope, momentum. Don't really like any of these. Is the inversion going with or against the flow? That 20 is kind of long. We want to gauge if and making the periods a bit faster, yeah, would be worth adding here. Once you understand it, let's run a few terminal commands to test it out before we proceed. I think right now the period is 20. Let's gauge 5, 10, 5, 8, 10, and 12 for perspective periods. Use the conda environment. Use and Python, not Python 3. That will be great vibes. Correlation, momentum oscillator. Okay, let me create a test for it. High probability, 84% trend. Trend is extended. Reversal is likely. Perfect for confirming if the FVG. Okay. I love it. I love it. Well, let's see how this works. All right, let me switch it up a bit. Excuse me. I had to sneeze. Anyone sneeze? Yeah, whatever. Let's keep going. Like, we're already making the files that we're going to need for our bot. This is kind of cool. This is kind of cool because when it comes to making the bot, bro, this is going to be super, super easy. I may just say that for another video because there's like 2 bots that I need to make. So what I want to do is just get this strategy ironed out, make sure it's Gucci. And once this strategy is ironed out, okay, then we can go with the bot development. Excuse me. Love it. I love it. Could not infer the format, so each element will be parsed individually. Failing to back to date utilization to ensure parsing is consistent as expected. Please specify a formula. All right. Let's see. Let's see. All right. Okay, gap percent. Excuse me. Okay, period comparison. I think maybe the 8 is gonna win out. I think 20 minutes is awfully too long. Oh, 10 period. So it's something that we had previously. Excuse me. Key findings, trade. Okay. The inversions are contrarian. The counter trend entries outperformed by 4.1%. The period 10.2 give good signal quality without the noise. No. Recommendation: add these 2 fields. Trend direction, bullish, bearish, based on the custom RSI. If call is true in bearish or put in bullish. Prefer avoid the trend entries with reversal probability of 70%. Win rate loses money. Okay. So explain what we're doing based off this data. Keep responses under 212 total tokens. what we're doing is we track how long the current trend has lasted and calculate the probability of reversal using the amazing oscillator plus RSI key discovery. If that FGV inversions are contrarian signals, we trade against the prevailing trend. Counter trend with the trend. Best filter found is the counter trend plus fresh trend. Where to add. This tells the strategy, am I reversing the trend or confirming it? Reversals win more. All right, but is this going to drop the number of trades we get? Fewer trade recommended, just log without filtering. Then you have data to analyze which combos work best. Decide with filters later. Okay. All right, let's do it. To do B. Option B. Yeah, let's just go ahead and get the data. Then we can analyze how we're going to use it after the fact. That's fine. Instead of being able to have it do it. So I'm fine. I'm Gucci with that. We're goo up with that. So let's go ahead and update the backtest for it. And this will probably be the last thing we're going to do today. Again, I don't want to make this video too long. I want us to be able to complete our work, right, but not get y'all to a point where it's like, because I can go like a couple of more hours and to be able to get this work really done. Excuse me, but I don't want to make this video too long. So I'm probably going to park it here afterwards and then come back a bit later to finish up our bots. Yeah. But again, within this 2 hours, about 2.5 hours now, you've all gotten great content. If I do say so myself. If I do say so. All right, here we go. Then you should like blast off. Yeah, I think this is going to be the final thing we're going to do, yeah? Then after that. Oh, wait, you fucker. Just tell me syntax. Okay, I'm running the backtest. Let me run it on both 22 and 23. All right. Let's run it on both 22 and 23 so we can gauge what the strat is doing. And this is the data scientist part of this like creating algorithms, because sometimes you have to be able to take a step back, make sure that you're properly labeling and categorizing your data, so we can do some post-eval work. And I can appreciate this. I'd rather take the long route, right, instead of something that's quick and expedient, because we all know fast money don't last. Rather something that's a bit boring but gets the job done. All right, now let's go run it on 23. And I'm gonna save, because I have 25, I have 21, 2, So I'm going to save those until we actually stamp the strategy. Then I'm going to actually use that for the review, or for it to be able to really validate it. But I don't want it to see the data yet. So I want to save that, and we're going to use that later. I bet. So I can take you. And then you should be done. That kind of, oh, I was about to say. Review using terminal commands, then let's discuss. Let's discuss. I think this will be very telling data. Win rate by counter trend. Interesting. All right, excuse me. Counter trend with the trend, counter trend plus fresh bar, and then counter trend plus mature. Win rate, bars in the trend. Key findings is that counter trend equals a 10% edge on the win rate. The fresh trend are the best, and then mature trends underperform, only 51 to 61%. The trend data is now logged, ready for future filtering if you want. All right, so this is where we're going to park it right now. So our strategy is making money, right? Our strategy is able to survive multiple regimes in multiple years, right? Now it's just a matter of being able to adjust it a bit so it can see and understand what we needed to, and maybe bump up these returns and being able to drop these the max drawdown and then the profit factor, right? So I think this is a good place to stop. We're going to come back a bit later to finish this up and being able to make our strategy, right? So as you can see, we're going through our progressions here. I didn't skip a step. I was very meticulous in making sure that where we are. So this is kind of where we're going to park it right now, right? So if you haven't already, I need to make sure you like and subscribe. GMSC, I really do appreciate you for joining the fam. Again, if you do have any other questions or anything at all based on what we've done, or if you want me to be able to drill down on a few other different processes, let me know. But nonetheless, welcome to the fam. I really do appreciate you for being here. But fam, I appreciate y'all. This is your boy Creative. I will be back